Hey everybody, Jake with TrendSpider here to go over the charts into the weekend as always. As always, we're going to start with SPY, but we're also going to do quite a few case studies today, as we usually do, but even more than usual, because there were some really cool things to pick out from last week's action and see how you could have used some of these proprietary features on TrendSpider to actually have an edge in the market. And I'm really excited to go over those. These have to do with raindrops, anchored volume by price, the ability to overlay multi-timeframe analysis on a single time frame. These are all things that I'm going to touch on today and show you why these things help you gain an edge and not just that they're cool. So starting off with SPY, one thing that I want to start with is the fact that one, we broke through finally through this resistance zone. The second thing that I want to mention about this, if you switch to the raindrop, notice the balloon structure on this setup. You've got just a beautiful setup where most of that volume is above the trend line. You can see buyers were clearly in control. This volume is showing that this, supply that was dumped on the market, because remember, for every seller, there's a buyer. So any volume that ever happens, there's buying and selling regardless. We want to know where those buyers step in. And so the raindrop gives us the ability to see where that volume flow is. So for all those people that started selling at 293, notice that this big chunk of volume was there to absorb all of those shares, and then we were able to really keep the price pretty much very close to where we closed rather than pulling back into the end of the day. So that is using the raindrop, just showing simply that there is a lot of conviction by the buyers from yesterday's action. And this is clearly just a laggard as well when we go over the QQQ chart. This QQQ chart, remember, this is still SPY, but the QQQ chart definitely shows us that we were way behind here, almost like 3 or 4 days behind. So we'll go into that in a second. The next thing, and I want to admit, this is one of the most fascinating things I've ever seen in my life. And I didn't even really mean to find it. I was just going through the MACD and I overlaid this SMA 20. So I'm looking at the monthly SMA 20, so the 20-month simple moving average. And I'm looking to see how the price has interacted with this area. So all I did was I looked back and I said, okay, every time the price has broken through this monthly SMA 20, and this is the weekly candle here, I uploaded the MACD below, and it's really interesting to see if you look at any time the MACD has been below the zero line, and remember the zero line is right here, and this histogram is a function of the zero line. It kind of just oscillates around this. And essentially what the zero line means is that the fast has crossed down below the slow. The fast is the blue, the slow is the yellow. So the point here is we're below the zero line on these three instances. Name this one, and we'll just keep naming this one just to show them. 1, 1, 1, 1, and then here's possibly another one. Now, does it happen the same way? I don't know, but notice here that every single time the price did break through, we were crossing the MACD below the zero line. Here's one, MACD cross, price close through the zero line, close through the SMA 20 on the monthly. Same thing here. Same thing here. And we're literally setting up almost identical here. I mean, it's almost kind of like crazy to think that this is actually a pattern, but it's kind of fascinating to see how correlated this MACD cross below the zero line is to this weekly candle close through the monthly SMA 20. So that is just a cool fact of the weekend. Doesn't mean that it's going to continue the same way it did in the past. If this did continue the same way in the past, notice that, we did continue up for some time back in 2019, and we did the same thing for 2015 and 2016. So that is just something I wanted to share using multi-timeframe analysis. That's this little button right here. Going into the Qs, though, we'll see something a little different. It's almost like we're going into time. What I have here is I've got the anchored volume profile started from this March 23rd bottom. I've got a ton of volume showing here right around this 213 area. So what this is telling us is since we bottomed on March 23rd, you can see that a majority of the volume in all of these candles that have participated, most of that volume was really aggregating right around this 212 to 215 zone. And so once we finally broke through this resistance line, you can see price really just took off. And this is one of my favorite case studies using raindrops into, or last week, but going into this week to show you guys really how to use these wicks. So if we go to the QQQ chart here, this is Apple, very similar to what happened on the Qs. But if we look at, the wick here on the daily chart on May 5th, and then you compare that to the raindrop chart on May 5th, you'll see something very interesting. You'll see that in this case, and let me make this chart a little the same on both sides, you'll see here that this candle was showing not the strongest, I would say, close here. We had a big wick, and then we closed below this resistance trend line. But if you look at the raindrop here, you'll see that there was volume aggregated at the top of this wick, which you can't see with just a typical raindrop in a volume column or a volume bar below here. Now, okay, sure, whatever. Well, the next day, this candle didn't look incredibly bullish either. Just looking at the open and the close and how much there was a wick here. Well, if we look at the raindrop once again, notice all of that volume was aggregated at the top of this wick, which tells us that sure, of course there were buyers or sellers coming in to add supply to the market. There's going to be people selling at profit or breaking even, whatever that participant is doing. But if we go to the raindrop, we know where the buyers stepped in to absorb that supply that was on the market. If there were not buyers here at 220, you would not see a big chunk of volume on the raindrop here. You would see the volume allocated somewhere else on this range where buyers finally did come in and absorb that supply. But we know here, even though it looks like there was a sell-off and the close was below the open, we know that buyers were 100% in control on the raindrop, and that's why it was really hard to look at the chart and be bearish last week because of the strength shown in these raindrops. So that is just something that I wanted to mention. We'll do another example here on Apple once we go through IWM. But IWM is just another one that's looking really interesting here. We're pretty much trading right at that 50% fib level here from this measured move from February 19th down to March 19th. So, this has been resistance in the past over the last couple weeks. Will this be resistance again? We'll have to see. But just going by this weekly candle, and we anchor this volume by price or this volume profile from this downtrend that started. Notice that, this is the first point on what becomes this downtrend. So since this point, we know from anchoring the volume profile from this candle, most of the volume is still holding way up in the 150s. So what we've mentioned in the last couple weeks is this area naturally becomes kind of a magnet above. And what you can see has happened is the price has really started to move up quickly, and the price even closed within this previous week's wick here. Notice here when we overlay the monthly SMA on IWM, we are still nowhere near this SMA 20. So does that mean that IWM is a laggard? We'll have to see. But just based on how the MACD is crossing here, it is interesting to see that we are in a very similar setup here. Very strong kind of move up on the fast MACD stochastic. And here, we didn't necessarily have the crash that we had here. So it's a little harder to circle this MACD cross and compare it to, these really sharp ones. But still, it's a MACD cross and it's worth looking at because, this is a pretty strong move up. For now, this is kind of, you can see that this MACD fast literally just went vertically straight down, and now it's trying to curl up, kind of similar to what we had here in late 2018, early 2019. We do have the gap above, so if we turn on the gap snake here, you'll see that last week we did partially start to fill that, but we still do have room to the upside in this gap to fill. So that doesn't mean that the price is going to continue up, but it does mean that this gap is still open for now. So let's go to the last one that I want to go over, and this is VIX. So this is part of this kind of broad market update. And I wanted to share this because this just shows you guys how high the VIX was in March. It looks like the VIX has just absolutely melted and it just can't go lower. But if you look, we are literally at this week's massive, ugly weekly close. we're closing pretty much right where we closed at the high of the December 2018 crash. So if you put that into perspective, the VIX is still very elevated relative to where it has been in the past. I mean, we're pretty much trading at these elevated levels, from these previous drops, which we thought were big, and then we compare it to this drop, and we're literally after almost 6 weeks of dropping, we're still only at these highs from the previous crashes. So does that mean the VIX still has a ways to go down? Technically, yeah. I mean, if we were going to get back to anywhere near where it's been at when the market's kind of finally stabilized, and we do have this massive gap below on the VIX as well. So I guess the question is will this become kind of the target below to fill? There's a lot of weird stuff going on right now as far as news goes. But, a lot of the news, you have to remember, is baked into the price a lot of the time. I mean, we had one of the biggest crashes in history. So, it's hard for the price to keep going down. There's, one, interest rates are so low. Where else are you going to put your money to try to find any type of return? It's almost like you're forced to put your money in the market. This is like deja vu from 2015, where everyone's like, oh, the market's going to crash again. Well, it's like, okay, if it crashes and these people take all their money out, that's why it crashed. Where are they going to put their money? They pretty much have to put it back in the market because they're not going to get a return anywhere else. So that is the logic behind the VIX possibly continuing to melt here. Going into this case study that we just did on the Qs, I want to show you guys Apple as well. It's pretty much the same exact chart, honestly, but it is cool to see the same type of setup here we saw on Apple. Apple did not look that bullish if you were just basing this on the candlestick pattern and where it closed relative to this trend line on May 5th. If you look at the raindrop, look at how much volume there was above this line. So all of this price action in this wick, it is telling us that 100% as the price dropped likely on low volume into close, because we know that all of this volume was, accumulated at the top of that wick. So like I said, how do we know that's not selling volume? Well, we do know it's selling volume because how is the buyer going to buy it? They have to buy it from somebody. So the fact that the buyers stepped in and accumulated those shares above the resistance trend line is what we're most concerned about, not the fact that this was selling volume. Of course, any seller, there's a buyer, any buyer, there's a seller. That's the way the transaction is done. So with the raindrop, you're more looking to see where did those buyers step in when those sellers started to dump this supply on the market, not necessarily was that selling volume, because we already know it was selling volume. If this was true sellers here, we would have not seen a lot of volume above this line because buyers would have not bought up the supply. You would have seen the price drop faster and you'd have seen this volume somewhere down below. So this is the way to understand how this raindrop is different from the hollow candle. Remember, this is a volume-based candle. This is just a candle as a function of the high-low, open and close. This is a function of the high-low VWAP on the left, which is the first half of the period, and VWAP on the right, which is the second half of the period. So this gives us a much better idea of the true forces at work rather than just your open and your close. The true forces at work, obviously talking about supply and demand. So that is Apple. That's another really cool case study, and there's quite a few of them this week with that. Just anything that was tech really kind of made that setup. Going into Bitcoin. Bitcoin is one that I really want to talk about because this is one that we've really looked at on the weekly for some time now, looking at this this volume profile that starts on June of 2019. What I did here was I started the volume profile from this top here that we had on June of 2019. So what we can see here is as the price was kind of trying to figure out what it wanted to do here, we clearly had this massive demand zone, just huge demand zone here. The price dropping here was clearly just margin calls. And remember, Bitcoin to a lot of institutions isn't necessarily, it's kind of like, it's almost like gold. I mean, if you look at gold, Look at how gold crashed when we had that massive liquidation move on in early March. Just because Bitcoin crashed didn't mean anything fundamentally changed in Bitcoin or gold. What changed was the supply and demand. If somebody all of a sudden gets a margin call on some position they have on SPY or something that's, in the billions, and they have to start selling things to essentially as collateral to cover their margin call, you're forced to sell. So one, there was likely not a ton of demand for Bitcoin during this time. And then two, you add all of those people that were essentially forced to sell getting liquidated in the market. And this is what creates these crashes. You didn't have this big of a crash on gold, but it was a similar type of thing where, if you got to cover a margin call, you sell what you have to sell. It's not like, oh, I want to keep my gold or Bitcoin position. It's like, no, you owe us X amount of money. You're going to sell what you need to sell in order to get back to your maintenance margin. And so that is the fascinating thing about forced selling and margin calls. And that is why we had this inefficiency here. Notice the price bounced right back up to this demand zone. Initially, this was a supply zone because remember, the price was below this area. So these people, anyone who loaded up here, were initially holding at a loss when the price was in the fives and in the fours. As the price went back up to this area, this became kind of a consolidation zone. As the price started to move up, this now became a demand zone because now the average person holding in this zone, right from around 7,400 to 6,800, was now holding in profits once we broke through this orange area. So if the price broke down, that's where there was demand. We call this supply above because this is where all of your people that loaded up at the top here in February of 2020, they loaded up at 10K and no one really sold because these shares are still here. And so now all of these people are breaking even, and now the price is having trouble breaking through this area. Because imagine if you had to hold Bitcoin up here at 10,000, it drops 62% in less than a month, and then it comes back up and moves back up about 160% from the lows. If you're holding here, not everybody, but there's going to be a lot of people who are like, yeah, I want off this ride. I don't like this. I want my money back, and I want to, maybe find something else to put it in that I don't have a heart attack, trading. So that's what you're seeing here. You're seeing this supply zone. You're seeing these people, likely people that were holders in the 7,000s are likely taking some profit at 10,000 just because 10,000 is one of those even numbers that's psychological. And then two, you've got all of that supply. You've got a lot of, not everyone, but you have enough people breaking even here and selling out where the price was not able to continue up. So that's why we've got this wick here. We tried to break through this supply zone. Supply outpaced demand, and we had this pullback. That doesn't mean that the price can't break through this ever. It just means that right now we're really trying to break through quite a wall at this $9,800 to $10,000 range. So that is Bitcoin, something that's really cool on the weekly. But then if you go to Chainlink, it's something that just blows my mind here, and it's kind of showing that this is a leader. If you go to the weekly chart here, notice we have something very different. If we anchor this volume profile from the high in February here, and remember, Chainlink hasn't been around as long as Bitcoin, so we can't go back and necessarily do what we did. I guess we could go back and start this from this period, and you'll see that there was still quite a bit of volume holding in this area, and it was kind of creating this shelf for the next move up. But if we go to the to the reversal in mid-February here, and this was like kind of our highest open, you can see that there was a massive base forming. And this is what is unique, right? The ability to just say, all right, I want to start the volume profile here, or I want to start the volume profile from this reversal. Most platforms, you have to go in and you have to change the chart. So if I wanted the volume profile from this point, I would have to start the chart from this point. Or I'd have to go into some menu and input the date that I want to start it from, which is a pain in the SS. And we've now all we can do is do this visually where we just move it. So we're reversing it from, or sorry, we're starting it from this reversal. We're seeing that there was a ton of volume creating a base for price here, whereas, you know, Bitcoin is pretty much right here in this step of the equation. So Bitcoin is finally just getting back to this area. Notice before, guys, this was not always a demand zone. This was previously a supply zone because the price had trouble breaking through this area. So if you're kind of trying to look into the future almost, obviously no one can do that, but if you're looking at a leader versus laggard type of standpoint, notice Chainlink is already breaking through this big chunk of volume, whereas Bitcoin and some of these other guys are pretty much now at this candle right here, if you want to like compare the two. So this shows that this was a supply zone. The supply zone became a demand zone because buyers came in and stepped in, and anyone who broke even and sold off, somebody absorbed those shares. As supply dries up and demand moves, and demand increases, you have a move in price. Remember, just because the price can go up without an increase in demand. That's the craziest thing about this. A lot of people think, oh, buyers have to step in order for the price to go up. No, if you look at a supply and demand curve, you can get a move up in price by just shifting the supply curve up. So if the supply dries up and the demand remains constant, you're going to have a move up in price. So don't think that buyers always have to step up for the price to move up. Sometimes you just need sellers to stop selling, which dries up the supply. And we do have a video on the supply and demand curves if you guys do want to see that visually. GE is the next one that I'm going to go over. Sorry that this video is so long, but there is a lot of information to go over. Let's go over on this one here for GE since we've already got it set up here. Turn off multi-time frame analysis. And what do we have here? We've got a few different things. On the daily chart, we have the Williams percent range. The Williams percent range is probably something a lot of you are not familiar with. It's not necessarily like the most popular indicator out there, but a lot of people use it for divergence. They're looking for these lower lows or higher highs on price, and then you're looking for the opposite on the percent range. You can use divergence with anything. It's not like you can just use it with, you can just use it with the RSI or the MACD. You can use this with a number of different things. Notice that I have it here on both charts. One, I've got it on this longer term chart. Let me just switch this up a little bit. And let's start this volume profile from when this drops here. Turn log on, and we are set. All right, so a few things. One, sorry that took so long there. One, we've got this really tight kind of symmetrical triangle forming. That's the first thing. Second thing is, if you look at airlines, if you look at Boeing, like Delta, if you look at Boeing, which is just, not an airline, but it's an airline manufacturer, and you look at where Boeing bottomed out at. Boeing bottomed out at like $89, and Boeing is now at $130. GE almost hit a new low this week when everything else is up probably 20% from its lows, at least like Boeing definitely, and I think even Delta is probably 10% from its lows at least. So if you look at GE, this is still lagging, and I've been talking about this as a laggard forever, but it still is, and it's still showing divergence, so it's still worth looking at least for me. This does not mean go out and buy GE because there's divergence. I'm just sharing with you guys some of these setups that I'm looking at as a trader using TrendSpider. I'm not a licensed broker. Obviously, there's always a disclaimer here that you need to do your own due diligence before buying anything. But it would be irresponsible for us to not show, ways that we're using the platform to make trades ourselves. I'm one of many on the team that trades, and so this is my personal strategy. If we brought Dan or we brought Brad and Zach on, they would all be showing something differently. So don't take this as like this is the way to use TrendSpider, but I do want to show you guys kind of what I look at when I'm trading, and so it makes a little more sense how I'm using these features. So first things first, the laggard. The laggard has nothing to do with TrendSpider. The laggard is just a function of, market activity. This is lagging behind, some of those other ones out there, and SPY as well. 2, we've got divergence, both on the daily and the weekly. Notice here on this candle right here, we bottomed out at 664. The Williams percent range bottomed out at negative 99.55. If you look at this candle here, you've got a close at 598, and you've got a bottom on the Williams percent range at negative 98.82. So this does not look like visual divergence, meaning like if we turned on the RSI, right, we would see that there is clear divergence. We can see that visually this is uptrending. So you also have divergence on the RSI. That's even more obvious than the percent range. But the fact that the percent range did not hit a lower low compared to this low that we experienced on March 16th, that tells me there's divergence, mathematical divergence. And I mean mathematical divergence because we really have to go and actually compare the two values, not necessarily seeing it visually like we do on the RSI here. And so what's really interesting about this is on the daily, you've got this ascending triangle on the RSI. Yes, you can use patterns on lower indicators, not just price. Second, we've got the weekly setup here. You can see from the gap snake, we've got this massive gap above. We've got the same thing on the Williams percent range here. We've got every single time here that we tried to bottom out in price on this trend down, we hit negative 99.34 when we were at 9. We hit negative 98.20 when we were up here at 920. So this technically isn't divergence. But notice that when we closed here at 796, which was lower than 9, the value was actually at 89. So still a higher low. We go to the next one, 650. This was our low here. We hit negative 94.61. We just closed here at 629, which is lower than 650. And now we bottomed out yesterday at 2 weeks ago, we bottomed out at negative 89.87. The price was 625. And then here we closed even higher. We technically closed at negative 82, but this was the lowest low here since here. And you can see this is uptrending the entire time. We're hitting higher lows on the percent range, lower lows on the price. And if you guys saw the video on CHK where I was getting absolutely destroyed on that one, this is what I used to not get out of the position. I mean, I was almost ready to take like a 50% loss on that thing, and then within 4 days it ripped 200%. I sold a little early, but it was a net profitable trade because I traded it twice. But the point is here is if you're down on a position, just look at the Williams percent range sometimes. I like to use the 5. The 5 because especially on the daily, you've got 5 trading days in a week. So this is essentially the weekly Williams percent range. And then sometimes I'll use the 5 on the weekly as well, just because you do find some interesting patterns here as well. Remember, there are 12 weeks in a quarter. So if you did want to do like a quarterly Williams percent range, you would change this 5 to 12. Just to look, because remember, there's 12 weeks in a quarter. If you're looking at the Williams percent range, parentheses 12, that means you're looking back at the last 12 weeks, and that's what the percent range is, being calculated on. So that is GE. Just wanted to mention that one. We're almost done here. I did want to touch quickly, though, on SPCE. SPCE was definitely a popular one this week. So I want to touch on that and show you guys, some of the logic behind this, why it may be moved up. Same thing as always. If we anchor this volume by price from the February 20th high here, you'll see since that time, most of the volume was really aggregating right around this 18 zone. So as earnings came out, and, I think it was better than expected. I don't really know. I don't follow SPE, but I don't really need to. I just needed to know that there was a ton of volume here holding at this, what we call the demand zone, because this is where all of these buyers were pretty much break even. So as the price is pretty much here, I like to call this the break even zone, because technically that's what it is. Everyone's pretty much break even right around this price. But now I call it the demand zone because the price is now above this area. So now we know that everybody that was break even when the price was holding here is now holding at a profit. That means that this is where demand was, and this is where either one, demand outpaced supply, which would give you a move up, or supply, just people stop selling, which also can create a move up. So, that is something to check out on SPCE. We had this massive just kind of price coiling within the point of control here, and then you finally had your move up. So the last one that I want to go over is SLV. SLV was another one using the anchored volume profile. If we start this anchored volume profile from this February 24th high on SLV, you'll see that the price was able to finally kind of get to this point where, remember, initially down here at 1397, this big chunk of volume was supply, because this is anyone that was holding in the 14s to the 1450s was technically holding at a loss. So that means that as the price gets back up here, some people may try to sell just to break even and get out. But notice that this does not always have to be a supply zone. These supply zones can turn into demand zones if the price if there's enough buyers to outpace supply here, or you just have people stop selling because they're break even. They're like, okay, I'm not going to sell here. I didn't enter this thing to take a loss. So as the price gets back to this break even zone, it becomes an area where the supply is going to dry up. People stop selling, and then you've got this pop in price, and that's what happened last week. So you can see there's still a massive volume gap here above, and if we did kind of move into this volume gap, the next supply zone where a lot of people are holding currently is around 15 bucks. If we do turn on that gap snake, you will see that we do have this gap above right here. We do have a gap below as well, so that's interesting. But we have two gaps above, one gap below, and a lot of the shares being distributed right around the current price. So does the price break out? Maybe. I'm going to create an Alphatrends anchored VWAP here to see where the average price per share has been traded, and that is right around where our demand zone is. So as supply dries up, meaning as people stop selling or demand starts to pick up, the price is going to go up. If demand decreases and supply remains constant, we're going to get a drop down. If supply increases over demand, we're also going to get a move down. So those are kind of the rules of supply and demand and how we can use this anchored volume profile to look at that. So I hope this video was helpful. I'm sorry that it was so long. Wanted to get a lot of information in there. If this video was helpful, please make sure to like and subscribe, comment below, give feedback, please, anything. And make sure to check out our Sunday afternoon-evening podcasts. I guess it's really depending where you're at. It may be Monday for some of you. So make sure to check that out. It is on the website, the Trading Pit Show. We do post the link and all that on our Twitter page before, so you can check it out there. Thank you so much again for watching this video. Make sure to like and subscribe, and we'll see you tomorrow at the Trading Pit Show at 6 p.m. Eastern. Have a good night.